Hey guys, how's it going today? So I've been making these videos for a little bit now, and I've realized that I've referenced market capitalization or market cap quite often. I do explain what this is in one of my first videos, what is a stock. But I thought I would just quickly go over that again, briefly do an explanation and maybe a teeny bit more in depth about what market cap is. So simply put, a market cap is the price of a company. So say price of Apple, we'll say again here is approximately 170 last time I looked at it, times the number of shares that are outstanding. And that will give you the market cap. Now, as I said before, this is kind of uh, a, a very, well, it's a very good measure of value in the company. Um, but large swings in the price of the company that can actually not have nothing to do with the fundamentals of the company, the profitability of the company. It could be just rumors, like I mentioned in one of my other videos, um, can make this market cap change in value drastically. I mean, imagine a 20% drop in a specific company. You could see in the price of it, you could see the market cap drop significantly, and nothing happens. So when you hear in the news, well, Apple's worth this or Microsoft is worth this, they're generally referencing, well, they pretty much always are, I found, they're referencing market cap. And so that has really nothing to do with how much money they're making. I mean, all things remaining equal, it should be interrelated. But that is what they're referencing to when they say what a value of a company is. So there's a couple ways to find it. I always use Google Finance, but I wanted to show you how to look at it in the financial statements. So here again, here is Apple, the 10Q. If you go down to the income statement here, quite often, I mean, you might have to look for it in different places on different companies. We have shares used in computing earnings per share. We're just going to look at basic for now, and there it is, 5.195 billion. So that's what they use times by the share price to give the market capitalization. Now, if you look at on Apple here on Google Finance, it should be pretty close here. We're looking at shares, 5.13 billion. They're very close. Times 169 will give you a market cap of 867 billion. So many people have speculated that Apple will be the first trillion-dollar company. Um, and I think it probably will be. So now that we understand what a market cap is here, it's kind of beneficial to look at companies and segregate them into different size market caps. So, for example, we'll start with Apple here. I believe it's still the most valuable company in the world. It's obviously a large cap or large capitalization company. So generally, these companies are worth 10 billion more in terms of the market cap. Um, some rules that generally follow large cap companies. They usually don't see huge price appreciation, but they are very rewarding with steady long-term gains and dividends. And usually they command a pretty low PE, although in Apple's case, this PE, in my opinion, is really quite low. And this is kind of where the debate comes in because Apple's being one of the biggest companies, if not the biggest, I believe, company in the world, still sees significant price appreciation. I mean, this year alone, if we look at 1 year, we'll go back here. 1 year. I mean, back in January, it was about 113, 110. Now we're looking at 170. So these aren't steady and fast rules. They're not always the case, but they're a good way to generalize. Like IBM and different big, large cap stocks generally kind of behave in that way. Now, there's also mid cap stocks. So they usually generally between 2 and 10 billion. I'm looking at Domino's Pizza here just as an example. It's 7.92 billion, so it's on the upper end. But they're usually in faster growth. Sometimes they're in rapid growth industries, and of course they're much riskier. And you could, obviously know that by looking through the financials of, say, a company like Domino's versus Apple. But it's another way to kind of segregate it into a mid cap. It's more risky, but potentially more growth. We've actually, I believe, seen this company appreciate pretty quickly. Yes. So the next one is small cap. So small capitalizations. I believe they're between a couple hundred million to maybe tops a billion. This one is one that I've looked at in the past and I've actually traded. Uh, its market cap is 419 million, right? Now these are highly risky companies. Usually, they're often speculative. Like this is a pharmaceutical company, and it's as you can see, it has rapid price changes. But in a lot of cases with these, there's a huge growth potential, right? Huge risk, huge reward. So it all kind of depends. This is kind of how you can structure your investment strategy. What kind of companies do you want to get into? Do you want to get into safe ones that pay a dividend that may or may not be too big, or this is a pretty small dividend on Apple here, but you know that the company's going to be around, or do you want to take a small cap company and potentially tenfold your money or more depending on the circumstances of the company. So that's kind of how people structure some of their investments. Generally, older people like these more because they have reliable dividends coming in for their retirement and such. And the younger you are, the more you can play around with stuff like this. But you have to be prepared to lose, right? So that was just a quick video today on what a market cap is. I hope it was informative and gave a little bit more information as to uh, what a market cap is and how it kind of relates to companies. Anyway, have a great day, guys, and I'll see you in the next one.